Hello everyone, welcome back to the continuation of the chart pattern segment. This segment we are going to study a pattern known as the triangle pattern. As the name suggests, you will be able to recognize a triangle in the chart when you are analyzing a chart. So post recognizing that, how will we trade it, that is what I am going to explain it here. Now see, if you see this diagram that has been provided, if you see, you will see that market is moving a little bit sideways. Whatever it is, market will move a little bit sideways in a triangle pattern. You see, now what is that actually? that is nothing but a consolidation. So to state it simply, a triangle pattern will always have a consolidation in it. So even if you are not exactly finding a symmetrical triangle or an ascending triangle or a descending triangle, but you are seeing that the market is somewhat going into a consolidation, then you can always trade it. Coming back to triangle, I'll just take you to the white screen and explain. See, what will happen is market will start moving like this and then make higher highs and higher lows, right? And higher lows like this. No, sorry, this is a different actually. I'll just restart it. So what will happen is market will move like this, make a higher high, and then go to this high, close to this high, and then make a lower low, then again go like this and make a lower low, lower high, lower low, lower high, lower low, like this. So if we connect this dot and these support lines, then we will get something like this. So if you see, you will get two things here. You will get an uptrend line and also a downtrend line. Whenever that uptrend line and downtrend line will converge, that will form a triangle. This is an uptrend line and this is a downtrend line. Whenever those two lines will converge, that is what leads to a triangle pattern. Now we have explained how to draw an uptrend line and how to draw a downtrend line in the previous classes. Please go through that. If it is not clear, then you can come back and restart this class. So I'll just repeat it once more. The convergence of an uptrend line and a downtrend line, it will create a triangle pattern, no matter where it is, either either ascending triangle, descending triangle, or symmetrical triangle, right? So when you are done with that, how will you trade it? See, the uptrend is here, this is the downtrend line and this is the uptrend line, correct? Then what you are going to do is, we will have two options: breaking of resistance points and breaking of support points. So when support points break, what we do? We short the market, and when resistance point breaks, what we do? We go long. Here, how you will be trading it is, each touch, if you are trading on the short side, say for example, each touch will be your targets, because generally when this thing is formed, ascending triangle is formed, you will, since you have a uptrend line and a downtrend line, you will be having at least 2 to 3 touches, right? So once you have that, each of those touches will be your targets. Say for example, now bringing logic into this, say for example, one of the touch that is there in this line is not a big target, then you don't trade that one, skip that touch, skip that point and trade the next one. But your targets will be based on your touches on the support line if you are trading on the downside. Similarly, if you're trading on the upside, these will be your targets, your touches. And if you feel, if we feel that the touches are not actually good amount of targets, it's giving very short, we'll skip it, we'll go to the next touch. So this is how we'll trade the ascending triangle pattern. So it will give you trades on both sides. It will have a uptrend line, it will have a downtrend line, it will give you trade on both sides. So what we can do is, we can wait for the breakout and the retest as well. Waiting for retest is very important, because market is as it is, it will be in overall consolidation. If you do not wait for retest, chances are you will hit your stop loss. So wait for the retest and then only take the trade. Clear? Now coming to descending triangle. Descending triangle is somewhat similar. So the market will just move like this. So you have to make a, you will also have an uptrend line and also you will have a downtrend line. So each of these will touch. Not necessarily each of these will touch, but at least 2 to 3 touches you will get on either sides. I just redraw it. So we will get like this. 1 touch, say it's not touch, 3 touch, 3 touch, 4 touch, like this. Or the market will come here as well. So similarly, now this will be formed in the downtrend. See, ascending triangle, descending triangle is ascending when it is forming on a descending triangle. It is when the market was falling and then it went to a little bit of consolidation, that is descending. Similarly, it is just if it's going up and then went into consolidation, that is ascending. That is just for nomenclature. Your application will be breaking of support and breaking of resistance. Similarly, here if it is breaking this point of resistance, you will go long. These will be your targets, or you can make this week your target as well. Or if you are looking to short the market, if the overall momentum of the market is short, so sell, you will get targets here: first touch, second touch, third touch. And also be mindful, the target you are trying to achieve is comfortable with your strategy. Meaning, if you feel that one of the targets are very less, you can skip it and go to the next touch. So this is how we'll trade it. I'll just make a gist of it once more and draw it, and just, or else I can take you to this folder itself, take you to this thing itself. Live example, I'm coming to that. I'll just show you. See, here it is shown that somewhat consolidating and it is going up. You can take the target. This is the target. If you see this figure, see this drawing here. Yep. So breaking the upper resistance point, giving a target on the upside, breaking the lower support point, it is giving a target on the downside. Similarly, upside and downside target on descending triangles as well. Now there can be a situation where it can be like this, a proper symmetrical triangle. It will have touches here as well, and then it will it will have touches here as well and here as well, like this. Then what we will do? Nothing, the same thing. This is very rare. Symmetrical triangle happens very rarely, and if it happens, you have to take the trade on a symmetrical triangle. That is a proper consolidation. Market will give you good targets. Market will help you achieve better profits. If it is a symmetrical triangle, we have to take the trade. There is no if and but. If you are getting into ifs and buts, that will not be. If it is triangle breaking out, we have to take the trade. You can wait for a retest maximum, but you have to take the trade. Correct? Similar, the trade will be like this: downside each touch, upside each touch. Simple. Now taking you to live examples. See, this is a ascending triangle. Exactly, it is ascending, then it went into a little bit of consolidation. So what we did, we drew the support points, we drew the resistance points, broke out once, did not trade, we will not enter into it, wait for it, went back and then again retested and broke out, gave a target of this. This is how you trade. So your entry point will be this one, this red candle, that is the entry point. Short the market, you will get good trade, and also daily time frame, that is a big target. Done. Now, okay, back test everything. Just be mindful, back test everything. then only you will get the experience of as to do what in which situations. How much should you wait for the retest, how much should you not wait for the retest, that is how we'll get. Now if we come to this one, what is this? Descending triangle, exactly. So market is just descending, went into a sort of a consolidation, gave 2-3 raised support points, broke out the support point, broke out the lowest high as well. So here you don't need to wait for the retest, because here market is also breaking out the recent low as well. So if it is breaking out the recent low, this is your entry point, take the trade. Since it is daily, you can get a good trade, and you can wait. See here, since you do not have any historical support points, what you can do here when you take the trade is you can wait for the market to go into consolidation. So it came here, gave a green candle and went into a sort of a consolidation. That is your exit point. You can exit there, and once you exited, you again saw that market is giving again a good breakout, then you can re-enter the trade. But for this trade, this would have been your target, since market had went into a consolidation. Now for symmetrical triangle, find out charts which have symmetrical triangle. I have explained it to you, and see whether the backtest is actually working or not, because symmetrical triangle does not occur that much frequently. If you find it out, if you have any confusions, do send it to us. We are just a mail away, and we are very happy to help. Thank you so much, and see you in the next class. Hello everyone, welcome to your next class or the next segment. This is the beginning of a new segment which is known as chart pattern. So chart pattern will comprise of 4 or 5 classes. You will get to know that in the curriculum. So now right now this class what we are going to study is the double top pattern. So the first slide, we'll move on to the first slide. As you can see here, if you look at the picture here, you will see this is known as the double top pattern, right? Double top pattern. Directly taking you to the white screen, and we'll explain there that what it exactly is and how to trade it. Say for example, the market was moving like this. The market was moving like this. It gave a breakout of this range, and it made a top. Another time came back, took a support somewhere in between, not exactly here, somewhere in between, and again it made another top like this. Okay, so this is the structure, this is the pattern that we call as double top. Why this is a double top? The nomenclature is self-explanatory. See, two tops it has formed, okay, and it has also formed a support line. So 2 points, support and resistance. That is the base of everything, support and resistance. So you can see support line, resistance line here, and a support line here. Just draw a proper support resistance line here, and a support line here. Now this chart, in this chart or in this pattern, this point is known as the neckline. So what we have to do from our side, since we have entered the application phase of the course, whatever I say, we have to follow it as a rule. If not, then we are not going to take this trade. If this does not happen, we are not going to take this trade, because that is the thin line between gambling and trading. If everything happens and we go and take in trades into everything, then we'll not become a trader. We'll then go towards gambling. That is a separate part. Let's come here and see what we have to do. Whenever there is a breakage of the neckline or the breakout of the neckline, that is when we will be becoming interested. Mind my words very carefully. Whenever there is a breakout of the neckline, we will be becoming interested, not entering into the trade. When we will enter into a trade, we will wait for a retest or a confirmation, like once breakout was there, another time a big breakout was there. Sometimes it will also happen that it will be still come back and take a retest. So always wait for a retest, and then once you get the confirmation that yes, this is a strong breakout on the downside, we'll take the trade, right? So always wait for the breakage of the neckline. If it breaks, now next thing comes, So what is the target that we need to achieve? Wherever the movement started, the first movement, that is wherever the first movement started, this is also, this overall this scenario is an ideal situation. It will not occur to you like that, it will not come to you like that. That is a ideal situation, it will not always come to you like that. So what you have to do is make an idea that yeah, this was say around 20-30 points, I'll take trade of 10 points, I'll take trade of 20 points, I'll take trade of 30 points. So ideally wherever the movement started, we have to make a target till there. Okay, break out of this, we have to make a target till there after a retest. This is how we trade double top pattern. So whenever there is a breakout of the double top pattern, we need to short the market, we need to short the market whenever there is a breakout of a double top pattern. This is the rule, but going by logic, there are 2-3 more things that we can also do. First, we will always try to abide by the rule. Then if it is not working, say market is going sideways, market is going haywire, then we will use our logic. First, always go by the rule. Rule is this. Now logic is, here is a resistance point, we can take this trade also by shorting. Here is a support point, we can trade this trade also by going long. Another point, if the resistance breaks, that will also give us a trade. But whenever we see this pattern, we have to look to short the market when the trend line breaks. Otherwise, when the rule is not working, market is going haywire, then what we will do? We will go by logic. Okay, taking you directly to the live example class. Okay, see, here we have SBI. On SBI, we can see two tops. One is here, another one is here. As I told you, it will not be always symmetrical. It can be little top, another one in the next top, it can be higher also. So here what will be the neckline? I can say that the neckline will be somewhere around, neckline will be somewhere around here. Correct? Correct? Yes, sir. Okay, then our rule is, we have to wait for the breakage of the neckline. So market went here, gave us resistance, came here support, second resistance, second support, third support breakout. But as I told you, whenever there is a breakout, what we are doing? We are becoming interested. We are not getting into the trade. We are becoming interested. After becoming interested, you see, what we will do next step? Wait for the retest. If you have entered here, you would have hit the stop loss. You waited for the retest, market went a little up, again broke the same support level, and bam, we got a target of a good trade of say 3-4%. 3-4% because this is our daily time frame. If you were trading in a shorter time frame, you would have gotten a shorter target, say 1%, say 8.8%, 1%. That is a beautiful target. 1% is a beautiful target in a daily 50-minute time frame. Okay, see, 6% trade. Now the important thing here is what we did. We followed the rule first. If not, if we saw that market was going haywire, what we have done? We would have looked for opportunities on the support level, like from here, or look for shorting opportunities from here. Or else what we could have done is, if we are not comfortable with this, we are not comfortable with just not if the rule is not working, we are feeling uncomfortable, we will be choosing some different pattern. It is not a hard and fast rule that we have to use this pattern. Choose what you are comfortable with, but whenever you are choosing, whenever using this pattern, always look for the rule first and then go by the logic. Okay, so this is what the double top pattern is comprising of. See you in the next class. Thank you so much. Hello everyone, Welcome to the continuation of the previous class. First class we studied chart pattern which is known as double top. This class we will be studying double bottom. Now how this is working, we will be looking into the segment, right into it. Okay, now see, this is the double bottom pattern. As you can see, the figure is stating how it is looking, what we have to do, everything. So to explain that same thing, I'll take you to the wide screen as I did for the previous class. Let's directly get into it. See, say for example, the market is moving like this. Market was moving like this. It gave a breakout of this level, came here, made a low, again came back somewhere here, again made a low which is very close to this low, and then it is somewhere here. Okay, so we have what we have 3 to 4 points of action here. the first point is the support point, or the connecting the lows. If we connect the lows, we'll get the support point, right? And we will also get the resistance point here as well. Similar to the previous class, this point is known as the normal support point, and this line is the neckline of the double bottom chart pattern. Clear? So trading here will be what? It should just be logically, it should just be vice versa of the double top pattern. You are exactly correct. So whenever we are getting a breakout of this one, what we'll do, we'll become interested. I'm repeating the same thing again. We will be becoming interested in the market. Then when the market broke out and gave a retest, that is our point to take a entry. Target will be what? As I told you in the previous class, if this is say around 30-40 points or 50 points, we will be taking a target of say a target of 20-25-30 points. So this will be a target somewhere around here, close wherever the trend is starting, right? Now this is the first rule of double bottom pattern. If we have a double bottom pattern, we will look to go long on the breakout of the trend line. If we have a double top pattern, we will be looking to go long on the breakout of the neckline. If the market is going sideways, or it is not following everything accordingly, or it is going haywire, sometimes that happens. If some bad news is there, anything, and you have not gotten a trade and it has come back somewhere around here, then what we will do? By logic, if it is breaking support, we'll short, and if it is taking support, if it is breaking resistance, here if it is broken out this part, then this will become the support. So if it is breaking this region, it is a short trade, and if it is coming back from this point, support point, this is the long trade that you can take. So 4 points of action you will have, 1, 2 and 3. Third one is this, and this is the normal one. The first one is breakout of this one. So double top is used for shorting, and double bottom is we are going to look for going long. Taking you to the live example, same stock that we used for the double top pattern. Similarly, see what do we have here? What we have here is one bottom and a second bottom, correct? So this can be the trend line, correct? Now here we do not have a retest. That is because we already have a confirmation here. It has broken out once, it formed a green candle with an upper wick, and then that wick was also engulfed by this candle with a good body. So we have gotten a confirmation that this trade will work. And also this candle, if you see this hammer one, this is also breaking this level generally, which is the resistance level of the, which already had 2 to 3 resistances here and here as well. So that is broken. then it will be a good trade. Now this trade is not completed yet, since this is almost the live market. So what we will do, either we can take a trade till here, which is actually we have almost achieved the target, or if you want to hold your trade, if it is giving a good candle around this point, we can do, what we can do is we can increase our target somewhere to here, but we also have to increase our stop loss somewhere to here, right? So everything in the stock market is connected. Everything is connected. You are trading say chart patterns, you will definitely have to understand trailing stop loss or increasing the target, or say you will definitely have to understand how to go about the support resistance points, right? Price action is the primary thing. Always price action is the primary thing, and then comes pattern, and then comes the rule, right? Then if rule is say the first rule that we are following, the double top pattern is not really working, then we can go by logics, then we can go by say resistance point, support point, breakout, anything. So if you're confirm, so we have to be confirmed first that this trade will work. We have to be comfortable with the pattern, we have to be comfortable with the strategy, then only we can take the trade. So this is how you can use the double bottom pattern. Retest it, see if it works or not. If you have any questions, please come back to us. See you in the next class. Hello everyone, welcome to another class in the chart pattern segment. This class we will be studying the head and shoulder pattern. Now the head and shoulder pattern, it is a very important pattern, and the occurrence of this pattern is quite frequent, and the results of this pattern is also very successful. So you have to be very careful while doing this class, not wasting your time directly getting into it. See, what is the pattern? Sorry. Here, this is the drawing of the pattern. If you see, market is making 3 separate highs, one high, another higher high, another high which is close to the previous high. This is your target, this is your entry. I'll be explaining in the white screen. Let's go. So if you see what will be the pattern for the head and shoulder is, market will go like this, market will make a high, market will come back somewhere here, make a higher high, then again market will come back in this support zone again, and then make a high which is not as high as the second one, but very close to the first one as well. Now this is an ideal situation. It will not happen like this. It can be little bit crooked like this as well. It can be, this high can be little bit lower. Coming to that later. So what we will do is we will just make the support and resistance points. So here what you see, first point that I can see is, the very first thing that you should come to your mind is, this is a good support line. Correct? This is a good support line. And tell me one thing, say the market is breaking this line once, twice, once it is breaking, but it has not come back here below this line. Now what is that stating? Market is, and also market has not gone beyond this line as well. Now what is it stating? Market is moving in a range, because market is neither able to break the resistance point, not able to break this support, but the support has been tried and tested much more. So if the support is broken, then the chances of getting a good trade are much more, because the support has been tested much more times. Because resistance point, you cannot draw one resistance point here. See, here it is somewhere here, here it is somewhere here, and here it is somewhere there. So resistance point you cannot properly draw, but support is very smooth here, and it has been tested once not once, not twice, but thrice, 3 times. Okay, so what will be our trade? We will be looking to short the market. Whenever there is a breakout of this line, we will be shorting the market. Again, this line is also known as neckline for the pattern. If it is breaking, we will short the market. Ideally, wherever the trend is starting, this should be the target. But if it is a very vague target, very far away, then you exit the trade a little bit earlier. Wherever market is taking a U-turn, a little bit of a green candle, if you see a big green candle somewhere, exit the trade. Right? Because if you keep holding it and you will expecting it will go down, not always you will get that. Right? So wherever the market is taking a little bit of a green candle or trying to make a little bit of a U-turn, exit it there. So this is how we trade the head and shoulder pattern. Correct? We will look to short it. We can take up trades also, but we will advise you not to do that, because since the logic behind this is, here the market is already consolidating, market is already moving in the range. If you try and take a trade here, high chances are market will move somewhere in the reverse direction, in somewhere in between. That is why always we have to, whenever we find a head and shoulder pattern, we have to wait for the breaking of the neckline and then we will short the market. But as I am telling you throughout the segment, always wait for a retest, because a retest will give you confirmation. Done. See, now a couple of more pointers in this. I'll just redraw it once more. Couple of more pointers in this. See, as I drew it earlier, it was like this, this and this. Right? This is the ideal situation. You are getting breakout of this, short it, close your eyes and short the market. Not a problem. But sometimes what will happen is, you might get a figure which is not exactly symmetrical. As I told you, sometimes you might get it like this. It's an uptrend, but it will form like this. So what will happen then? Your uptrend line will become your neckline. Short it, each touch will become your target. Uptrend line will automatically become your neckline. Each touch will become your targets. Okay, understood. Sometimes this might also happen, that market is going like this, meet couple of highs like this, made a central high like this, and meet 3 highs like this. So this can also be considered. This can also be considered as a head and shoulder. How you will consider this? These 2 highs will be your shoulders, and these 3 highs will be your shoulders, and this will be your head. Breakout, short the market. Now if you get 2-3 shoulders together, see this instance 2 shoulders, this instance 3 shoulders, 2 shoulders, 3 shoulders. If you get that together, that means market is consolidating much more. That means if it breaks down the neckline, it will give you a target much easily. So whenever consolidation is a great advantage. It's a great advantage in stock trading. Okay, short it, you will get a target, whatever your target is. Let's take you to the live example here. Here we have Axis Bank. What we see here, see, as I told you, ideal situation will most of the times will not have an ideal situation. It will generally be a little bit crooked, a little bit upside, a little bit downside. Here what we have is, see, market started from here, made a small high here, then took a support from here, made a big high here, and then again came here and make couple of highs here. See, so now what we have, 2 shoulders, 1 head and shoulder pattern, right? 2 shoulders, 1 head. Now since we have a lot of shoulders, as I told you, that is very good. That is very good for the market, because it signifies confusion and consolidation as well. If the market is constantly moving around the price, that means market is unsure of it, how where to go, and once it is breaking our consolidation, then it is a kind of a guarantee. And what is the confirmation of your guarantee? Retest. I have been stressing this too much, but please always wait for a retest. Okay, now what we do, market breaks the line here. Why we could have entered the trade directly on the first candle is, see, if you see this level, 2-3 times market broke it but did not close it beyond the support level. Now it gave a proper closing here. So after 3-4 times of trying, if market is giving a proper closing, that is our entry. We have to get in the trade. So we get in the trade. Our ideal situation would have been wherever the trend started, somewhere around here. So if we extend the line, we get a target till there within the day itself. This is the power of 2-3 heads, 2-3 shoulders. This is how you trade a head and shoulder pattern. If we get the head and shoulder pattern in a live market, we have to trade it. We have to try and short the market. It can also be a prediction that the market might go down a little bit, depending on your time frame. If the time frame is long enough, and if a head and shoulder pattern is formed and the neckline has been broken, what we will do, we will predict that the market is going to go down. If something else happens, that is different thing. Technical analysis, price action will say, if the neckline is broken, market will go down, we will take the short trade. If the trade does not work, no problem. We have to follow this as a rule. Short support line break or neckline break of any chart pattern that I have been teaching you, short the market. Double top, any chart pattern as in double top, and this one. If you get this one, that is brilliant thing. Generally it will form up over a period of 2 to 3 days. Third day when you get it, short the market. This is how you trade a head and shoulder pattern. Hope you're liking the classes, and see you in the next class. Chart patterns 1, chart patterns 2, chart patterns 3. Now this is another chart pattern. The chart patterns this chart pattern is known as cup and handle. Cup and handle seems funny, but very useful. Okay, now the figure is clear. Figure is self-explanatory, but still we guys need a white screen. Let's go. See the figure first. Just make this thing. Okay, let's go. Now what will happen in a cup and handle pattern? We will see market will either come from the below or come from the top and make a pattern like this. It will start going in a downtrend. It will start going in a downtrend. Somewhere in between the downtrend, it will take a reversal. It will not directly go up. It will take a reversal. Then again it will go and retest this reversal point, and then again it will come up. Then again you will have another sort of a consolidation like this, and that is your entry point. So what I said, either will come from up or down, go to the downtrend, take a reversal, retest the reversal and come up, and then again it will create a consolidation. Most important thing in stock market, consolidation. If you get it, you will get God, something like that. It's like gold dust, consolidation. So after this consolidation, if it is breaking out, either you can make a target of this level, or you can make a target of say whatever is the, if there is a historical resistance level, definitely that is the target. If not, this say around 2 to 3 1 to 2% if you're trading intraday, and if you're trading daily, then can be anything till you get a green line, till you get a red line. Why red line? Because this you have to go long only. There is no shorting option here. If you need to short in a different chart pattern, no shorting option here. You have to use this chart pattern for going long only long. If you are trading intraday, 1 to 2%. If you are trading say if you are swing trading, hold the trade until you get a big red candle. That is it. Hold the trade until you get a big red candle. This pattern is very useful. Why? Because it consists of all the things that you need, all the things you have studied till here: resistance point, reversal, retest of the reversal point, coming up, consolidation, everything. It has everything. So if you get this chart pattern, use it to good effect. Now going to the live example, Asian Paint. See, as I told, market is coming from a uptrend, coming into a uptrend from here. Little bit of consolidation, fell, took a retest, took a reversal, fell again, retested the reversal point, came up, gave a consolidation, green candle. Close your eyes, enter into the trade, or wait for retest. Here I'll if it was me, I would have taken this trade because it is a beautiful green candle. 90% of the chance you will not break it. Yeah, if you are not an experienced trader, you will get a little bit of heart attack here that okay, I might hit the stop loss, but no, it is a cup and handle pattern. It is breaking the last consolidation point. You have to take the trade, otherwise we're not trading, we're just observing. Have to take the trade. That is when we learn. Took the trade. I will make a target of here because the actual downtrend started from here. Easy. In a day I'll hit the target. Now when I see here, additional advice for you guys, when I see here that the market here is continuing the trend, say this candle, say I have exited on this candle, red candle, then I see market came here and again broke this level, I'll re-enter the trade. I'll hold the trade. See, because this level has also been broken. Everything is based off support resistance level has already been broken, which was not broken in some time. I took the trade, entered into it. I'll hold the trade till I get a big red candle. I got a big red candle here. One pattern, 3 benefits. This is the beauty of the cup and handle pattern. If you get it, you trade it. That is the last line I would say. If you get the pattern, please trade it, please. So this is what was chart cup and handle pattern. See you in the next class. Welcome back to another class of the chart segment. So this is one of the most common chart patterns that you will find out in the stock market. This is a bullish flag and pole. Generally flag and pole to be accurate. Now here we will be studying the bullish flag and pole, bearish flag and pole next class. So getting into the bullish flag and pole, name itself suggests we will be looking to go long whenever we get a breakout of this chart, or whenever we get this chart. It will generally be a trade on the long side or on the buying side. Okay, now see, if you see the current figure that is displayed here, this is what is actually a bullish flag and pole. You will get a uptrend, a little bit of consolidation in the form of a downtrend, and then when the consolidation is broken, we will get a trade. Generally when the trade occurs, it occurs like when this chart pattern occurs, it occurs in a series. Say one flag and pole will get another breakout, another flag and pole will get, and it will keep on going. Okay, and generally it's cleared by now that is it occurs in a uptrend. So I'll be using the green one. So market will go like this, uptrend, take a downtrend, it will go like this, and again take a downtrend, it will go like this. This is the flag, this is the pole, and this is the flag. Since it is shaped like a flag, that is why it is known as flag and pole. This, now if we logically see, what have we told you throughout this course, that market will move in a zigzag way. If it is moving up, it will not move like fully go up and break the chart and go. Not possible. Market will always take a retest and go and like this. So now tell me, what is this exactly? This is nothing but a retest. Proper retest is taking and then strengthening itself and then going up again. So you will generally find this in an uptrend. Now what happens is, sometimes we miss to get the trade here. Maybe this was a breakout of a good resistance line, we have missed the trade. So what we have to do, we have to wait for the market to create a low, and if it is like a flag and pole, if it is like a flag, then it's definitely very good. We'll wait for the market to break this level and we'll take the trade. Diagram has become a little dirty, I'll just redraw it. So market will take a consolidation like this. Whenever it is breaking this level, close your eyes and take the trade. If you are not confident as to what is the target will be, take the trade till here. See what is the market doing here, wait for it. If it is breaking out, increase your stop loss till here and increase your target also a little bit. That is how you need to trade the market. This is very simple and it is very common to find a flag and pole. Okay, taking you to the live example. See, this is Asian paint. It's visible. If the pattern is so clear, it is actually visible here. See, it is actually visible here. Pole, flag, breakout, and also a, see, it is also taking a support from the this thing. After breaking the position span, it is taken a support and then it has given a proper body. This is a beautiful trade. Till here you automatically trade it and it's going holding. You can exit it here because you're getting a red candle. Then again when it is coming and breaking this level, then again you can look for an entry. Correct? This is how you trade a bullish flag and pole. Okay, so this is the crux of the bullish flag and pole. Bearish flag and pole theory and live class will be coming on next. Thank you so much. Welcome back to another flag and pole class. This time we are going to look into bearish flag and pole. As the name suggests, in this pattern we will be looking to trade on the shorter side or the downside of the market. Now as if you can see the figure, generally bearish flag and pole will be formed on the uptrend. This pattern will be formed in the downtrend. So for example, how we'll be using this is, for example, we had missed a proper downtrend trend. We are going to wait for the market to take a retest. We are going to simply, when the retest is done, simply short the market. That is a simple way of putting it. Just let's go to the white screen and see what we can do here is, say market is falling, started to fall here. No, see market has started a downtrend from here, it's going down. Again it took a simple retest. That is our cue. As soon as the market takes a retest, not one candle, obviously you have to wait for 2 to 3 candles. If it is taking a retest in one candle, that is not technically a retest, it's still continuing the trend. Since the market moves in a zigzag way, it will go a little bit up. No, couple of candles, 2 to 3 4 candles, you find that the market is going sideways or it is going a little bit up and creating a consolidation, mark the zone, wait for the market to break this. See, technically if I see, I can take this trade also, but we have patterns for taking trade on the long side. If you mix everything with anything, everything with everything, we will not be able to segregate it actually, because some patterns are for the downside, some patterns are for the upside. If we try and find every trade in every pattern, so ultimately we will not be making use of any pattern properly. So whichever pattern I am telling is for the short side, whichever pattern I am telling is for the long side, please abide by that. Please abide by that. You have to follow it as a rule. If I get a bearish flag and pole, I'll short only. For uptrend, there is bullish flag and pole, I'll take the trade. If I get nothing, I'll not trade. Not a problem. Not a problem. Everything is ultimately dependent on how patient you are and how accurately you're choosing your trade and how comfortable you are with the pattern. Okay, so this trade is not required. Short the market, take a trade till here. If it is breaking that levels, increase your target and decrease your stop loss. Easy, right? Now let's go to a live example, because there is nothing much to explain since I have already explained the bullish flag and pole. It's the same concept, just in the opposite side. Now try and spot the bearish flag and pole. Give you a couple of seconds. I'm guessing you have spotted it right. I just show it. Downtrend, little bit of a consolidation. Look at the target. Man, if I was here, I would have definitely taken a target. This candle you have to enter. Whatever is your trading psychology, you have to enter in this candle. Look at the size of the candle. Oh my god, we have to take this trade. If we were on the live market, we had to take this trade. This is the advantage of a bearish flag and pole. We might have missed this trade. It went down, it consolidated a little bit, it retested a little bit, making giving a notion that it might go up. Bam, it broke it. Bam, fell a lot. So if you would have taken this trade, 30 minutes trade, might be if you were in 15 minutes, you would have gotten a earlier entry. But since I'm explaining it in a 30-minute time frame, I'm just assuming that we are going to take trade on this. If we have short the market, another 1.2% in a daily trade. 1.2% in a daily trade. What else? Why I'm telling this? Because 1.2%, generally when you're doing intraday, we generally get a little bit of a leverage that we will be taking we'll be explaining somewhere in the course. We will be getting a bit of a leverage. So 1.2% will actually, if it 10 times leverage, it will actually go to 10%. 10% in a day, I have nothing to say actually. So this is a very, very good pattern, flag and pole. It is very common also. If you get it, please do trade it if it is breaking any levels. And also bearish flag and pole should only be used for shorting. Bullish flag and pole should only be used for going long. Thank you so much and see you in the next class.